Yesterday we were talking about 22,700 being the key point of resistance and how strongly that has been taken out. So that is a big positive.
Blown in the wind.
Blown in the wind, right? Blown away. You can use various euphemisms for this, but it was heartening to see what had happened. And I was looking, and because you mentioned technical, yesterday I made it a point to look at all the technical notes that came in post-market hours. So one of the things that stood out for me, and I'm not a technical analyst per se, but this line stood out for me. There is not a single hourly candle which closed below its prior one, which showcased that there was a significant uptrend. Simply put, every hour, if the market made a candle, the next candle was higher than the previous one. There was not a single point of time in the market yesterday when it was broken. So superb uptrend yesterday, which is possibly a great sign and something that we'll talk with our technical traders today. And the FI net buying number suggests that there was strong numbers in banking, which led me to try and see if there was delivery-based buying seen in banking names. So ICICI Bank saw 1,275 crores worth of net delivery-based buying yesterday. HDFC Bank, this is only the NSE, but NSE is the largest volume per se. HDFC Bank, 1181 crores of net buying of cash delivery-based buying yesterday. Kotak Bank, 805 crores. There was SBI with maybe about 600 crores, and then Zomato had a little, M&M had a little, but banking per se, yesterday was the bulwark of the market yesterday, and some serious delivery-based buying seen yesterday. And you know why? And therefore, then just the small next piece, I was looking at what Somit sent from the BofA Global Fund Manager Survey. And you will understand the relevance in the last line of this, but the manager survey is great from a market's understanding per se as well. It's the second biggest drop in global growth expectations ever, which is not a great sign, by the way, because people are saying that growth will suffer. But it's the biggest drop in US equity allocation ever.
Right.
Biggest jump in cash since March 2020. Now, if US doesn't get the cash, do emerging markets do? Does Europe does, right? And Eurozone has some serious allocation. So the positioning is nowhere near extreme bear case, but allocation to Eurozone stocks is highest since July 2021. So that's one area. Last line, banks are now the world's favorite sector. And if this is happening, despite Jamie Dimon's selling of JP Morgan stock, notwithstanding, but India has been consistently saying that banks are looking very attractive, valuations are great, growth is good, dependable, much unlike some of the other places. Our FI is going to come back to banks was yesterday the first sign that we saw of FIs really going out and saying, okay, let's go and buy banks. Let's wait and watch.
Fingers crossed and more. So it's going to be an interesting day. Steel stocks are going to be in focus as well because of safeguard duties. We'll come to that in a second. So much to unpack. Just one point on, apart from banks definitely being the bulwark, what I think was also very heartening about yesterday that it was broad-based.
Small caps.
You saw your small caps, you saw your micro caps, you saw everything.
Running. And a lot of stocks have got beaten down, right?
Morpin, all 13, 14, 15% up. So that gives you heart that, maybe people's portfolios also looking better. But what are we, gleaning from F&O cues? That's also important to see if the momentum continues. Puneet is standing by for more.
Well, thanks for that. So definitely, the Indian equity market seeing its biggest rally in the last 2 months, specifically yesterday, reclaiming 22,800, and we've seen specifically that the resistance level has now moved to 23,100 to 23,200 odd levels versus 22,700 yesterday. So definitely most brokers anticipating a more gaining side. Apart from that, the support levels have also moved up to 22,700 from 22,400 odd levels yesterday. So definitely a big positive. The GIFT Nifty also anticipating a gain of about 54 points. But let's look at the Nifty as well as the Bank Nifty snapshot, because we did see open interest for both these indices come down by about 2% specifically for the Nifty 50 futures, but it was at a premium of about 61 points. The Nifty Bank as well specifically, we did see a premium of about 107 points, but again, open interest was lower. But it'll be very interesting to see Nifty Bank because it's finally moved across its 48,700 to 48,000 odd levels towards the highest end and towards the resistance level of about 50,300. So definitely something to watch out for in this session. Let's also look at the Nifty open interest distribution as well. And we've seen the range of the maximum call and the put option interest small in this particular time frame. So in specifically when you look at the call interest, we've seen 23,000 call open interest with the highest options at that point, and roughly on the maximum put option interest is at 22,500 from 22,000 earlier. So definitely a positive momentum. Just in terms of stocks, it was a very interesting juncture which we saw in the open interest gainers yesterday. All long build-ups across the platforms. Titagarh Railway, after a short build-up across the last 2 sessions, has finally, changed that pattern, specifically for PB Fintech as well, continuing its long build-up momentum. In terms of open interest losers specifically, we did see, short covering across the board, and that specifically is a bullish sentiment, anticipating, a further upsides from these levels. So very interesting session yesterday. It'll be something to watch out for today as well.